Hey, in this video, I'm going to learn from the trades that I've taken in the past 2 weeks. If you want to join me, let's jump right into it. Yeah, I want to review some of the trades that I've taken for the last few weeks. There are not many. The holidays were very choppy, so that choppiness prevented me from taking a lot of trades. But I'm going to review a couple of them that I think are very important to review. I learned from these videos, and you can adapt whatever I do to enhance your trading system. Remember, this is my trading system, but it's not. I learned it from someone, right? But it's sort of like adapted to my psychology, exclusively to mine. So I cannot transfer you this knowledge and you can apply it as it is. So you will have to adapt it to your psychology, the way you think, the way you think is better for you, right? So I do internals, and this is a very important trait, and how I lean into the internals. You will see why. And I will review also a couple of trades that I took today. Break-even trades, very important. Stay till the end because that trade that was a break-even, I was 9 points up. I made a very big mistake, not scaling out, having multiple contracts. And not only that, I just took break-even, right? Could have close my position. I could have scale out, but in trading is a coulda, shoulda, or woulda. I didn't do shit. I just held till I have a break even. Now I'm not very proud of it, but I need to learn from it. Okay. So this is a trade that I took on the 22nd of December. Is a very important trade because is sort of like a break, opening range break trade type of trade, right? And then the market shifted. It did not have a trending conditions, but I understood why. Okay, so I'm gonna review this trade. This is the entry point right here, right? And I get very aggressive on getting this trade because this is the 5 minute. Let's go to the 30 minute. So this is the 30 minute. This is the day that I'm trading, right? Let me get rid of all these because this is the third time I record this. Okay, so I understand that the market has a trend to the upside. And remember, the market moves in thrust, it pauses, it balances, and then it thrusts again, right? So for instance, this is a move up. Here is a balance area, another move up, another balance area, another move up. And I'm thinking, all right, so the market already moved up, it's quite overextended to the upside. We might be in a balance range, but we don't know yet. So I'm thinking this is the balance range, right? Up to this level because I'm trading this day, right? So this is kind of the range that I'm putting the market could be building. I have few areas within the range. That doesn't mean we cannot trade the range, right? This is a 30-minute time frame. So I see this area. This area is very important, right? Why? It's a support that held here for 2 days, right? It held here at the open, and then this sudden drop just slide through it, okay? But you see this in hindsight, but the market opened up here, and you would expect for this type of areas to have some trap buyers, right? So you would expect that this area after the open would cause a drop in the market. But what happened is totally the opposite. The market continued to the upside. I'm putting the 5 minutes so you can see. And if you want a reference, you want to see it yourself in your chart, this is December 22nd. Okay. So this is on the 5 minutes. So on the 5 minutes, I see this candle on the 4th minute, so bullish, right? And not only that, I get to this. That is when I lean into the internals. So I see tick chart opening up at 1350. And I can tell you based on my experience, probably between 5 and 10% of the days of the entire year, the tick chart can be so bullish or so bearish, so extreme, I mean. Okay. So, and after the 3rd minute, and I understand after this opening 1350, I think tick chart is gonna go to 0 because it's so extreme. Is a number that is not sustainable in the long term. So I think, okay, this thing is gonna go down, and it kind of went down, but look what happened on the 4th minute. On the 4th minute, you have a close here above 1000, and after I see this, and on the 4th minute as well, the advanced decline is actually breaking the opening range here. Okay, this one right here. I said, all right, this is worth the risk. We probably have some sellers trapped here now, right? These sellers are probably trapped here at the open, and this might be a trending day to the upside, right? So the first thing I want to review is this: how I put my entry. So I see that the market is opening to the upside. Probably sellers are trapped right now, and I want to get in very aggressively. So the question is, where? What is the location? I don't think this thing is gonna go to this 08. So I lean on these candles on COT. So I go to the footprint, and here's the COT right here, second minute of the entire session, and I put my order right here, right? I get filled here, market goes down to 8, and you see, like in this 1 minute candle, this is the COT where the majority of the orders are, but it's very evenly distributed, right? It's kind of like, yes, it had a lot of volume here, but the rest of the candle is like evenly distributed. So it could bounce at technically at any point. Some will argue that this one have a little bit more volume, and you can see like a little bit more like greenish or dark green instead of like this one, right? For instance, higher volume. This is higher volume. You see that? You can notice it. This is lighter green, lighter green. This is like a darker green, right? But nevertheless, market never got to this area, to 08. So it got to 08.25. So I don't want to take risk not getting filled. I put my order here at 10. I get filled in, and the market started to bounce, right? When it started to bounce, now I already had my target in mind, but I want to review my exit because I understand that there is some bullishness from the day before. If you see this sudden drop is very, very aggressive. Very aggressive. This is the drop that happened the day before. So, and it's so good how I learn how to read the market, because it helps me navigate through any environment. And I respect people that use indicators and have a more mechanical way to trade. But my way to trade gets me very confident because I could trade any type of environment. Like in the holidays, 10-point range, I didn't trade because I didn't have a trade. But I can bet that a lot of MACD traders had some crossovers to the upside or to the downside. That's what I'm saying. So I need to see clear the setup, right? Internals, setup, boom. And that doesn't mean that works all the time. It doesn't work all the time, right? But it works on my psychology. So this is the range from 2 days before, and then I see this range and then the sudden drop. And when I see the sudden drop, I see the retest. So I say, this is probably a support area, right? And then when we had the drop, all these buyers that were accumulating here had to bail out and had to close their trade, right? This is exactly this same type of trade, right? Now I'm thinking this is a very good area, good location. I need to get out before, okay? And you can review the trade. I think I had my target on, I think it was 21 or 20.5. At the end, I brought it down to 20. So I had a more probabilistic target here. That's where I closed my trade. And then the market did its thing and started to drop. This area held for a little bit. Now, what happened if we didn't have this retracement, but the market continued to the upside? I thought, well, this area is still some area that you can take, but after this range, I don't think this is gonna hold, right? Why? Because you don't have an opening balance area. You just have a candle to the upside. It's different. Like if you have this type of shape, like down, up, down, consolidates a little bit, and then it launches from here, right? Here, I've learned the hard way that if you have just candles to the upside and not balance, it's hard for it to hold. So I would say probably half of the area to retake this long support line here with internal supporting it, right? So it's 08, so this would be like around 05, right? This is like half of the area, okay? Let's say 0550. Now, it's important because now if you're gonna take this area later during the day, you need to understand that this balance is coming off of very good launching point here at 20, right? So probably you should believe these sellers, that these sellers are serious sellers, right? And you can see how it takes prices down, right? So what I like to do is, since I have this balance area coming off of a supply right here, I like to see if I could take the trade before this, right? And you would say it's in hindsight, but this is something that I apply all the time. Like I applied it in this, I played it in this trade, okay? I learned how to respect these areas, right? 1, 2, 3, probably buyers trapped here. I'm gonna try to bail their position out if prices come back. Okay, so what I like to do is this. I do some sort of entry here. And at this point, I do want to risk the entire area, but I want to actually, let's do it with this one. This is a better calculator that I use on real time now because so many days. Okay, so this is the calculator. I like to put the target and the stop, right? And based on the target and the stop, where my entry should be for at least 2 or 3 to 1. I want to get 3 to 1. My entry should be around here. You see how this trade works perfectly? Now, it gets to like 2 to 1 before it gets back to your entry, right? So there's a debate that I don't want to get into it. You could have scale out or held this, etc. The thing is that prices finally got into target, okay? Right here. You can see if you fast forward, this area held, and at the end of the day, this ended up bailing. Right? And you can see how we break these to the downside and we had a retest. Why? Because there are some buyers here that are trapped and they see this drop and they decide just to bail their position after gets to certain, close to break even, whatever, or minimum loss, etc. Those are the dynamics of the market. So this is the first trade that I'm reviewing. Let's go to the second one. Okay, we fast forwarded to January 2nd, where I took this long here, more like a tradable reaction. And you can see here, let's put this red line here so you can see sort of the big picture, right? So here you have a few things. You have a launching point because from here we have a very important thrust to the upside, the gap, and then we came back to this level. We were not even close to this launching point, so there was a lot of bullishness here, and I have this area right here as a launching point, right? Remember, I'm thinking the market is creating this balance. Let's call it right here, and you can see how today is Wednesday the 3rd, we're still within this range, right? Well, we are creating a value around this lower part of the range. And we break this area. For me is a bias changing zone, right? Because if we end up breaking this to the downside, we have a break of the structure of the market, right? And we can go to the next balance area, which is around this level, right? 46.63. It's quite a lot, but that's another topic, right? Let's focus on the trade that I took here. It was yesterday. So the trade was right here. I see the opportunity here on the footprint. This is 950. I want to see now. There's something that I need to clear up. Internals are not 100% straightforward to read. They diverge sometimes. Sometimes they don't diverge. Sometimes they work. Sometimes they don't. So you will have to get a lot of experience. I'm still getting a lot of experience, but I am developing this sort of intuition about internals. Okay. And I think that's the beauty of trading or day trading. That if you develop this intuition, there's no one that can stop you. And more that, not only that, but it's something that cannot be mechanically replicated or by algorithms, right? Because they don't have that intuition. So there's one point that I've talked about a lot in my live streams is that we are in an uptrend for the last few months, and all the demands have been respected and the supplies are not, right? That's obviously because sellers bail out quickly because they understand that a lot of buyers are coming into the market. But you can sense that on the tick chart on this way. When the market is dropping and you have no momentum, tick chart is a momentum indicator. And if you don't have the momentum that is required to break the demands, then simply the market will attract more buyers like I do. Like I was watching the tick chart coming down and the market coming down sharply, more than I would desire or I would want to. But the tick chart is printing minus 300, minus 350, right? So let me show you. So here's the market. Now, first, let me show you this. Here is the market dropping a whopping 16 points, right? And you can see here, this is the 950. And let's go to the internals. 950, it barely got to minus 600, right? You can see other days, like for instance here, the same day at 1 p.m., it was printing minus 900. Still not the best one. I want to see sustained numbers below 800, like bouncing from 600 to the downside, bouncing 600 to the downside. That's momentum to the downside. But I see this minus 600 bounces, minus 600 bounces, and now creates a new high, right? And then comes down to minus 500, creates a new high, right? And then it comes down again to 1012 in the morning, but it's coming down to minus 400. And this is when I realized that my trade was not the trade. It was a good trade in terms of risk and reward ratio. You see how I respected this area of sellers. I'm gonna leave you a link of the live stream. I took this trade live as well. So I respected this area of selling, right? I took my target before this area of selling, right? And my risk and reward ratio was okay, more than 3. Here's the thing. Why my trade was not the trade? Because I do think, and this is being very honest and being humble, that I want to learn and become better. This is a trade that I should have taken, right? This is 1038. You see 1038 right here. Let's go see the internals. 1038. Again, minus 600. Nothing, like not a like big momentum to the downside, right? And then the bounce, right here. Nevertheless, my trader was good. I took a little bit of heat from 76 to 74 a quarter, not much, a couple points. But then this one got the best risk and reward ratio, right? So this is the second trade that I took. This was yesterday, and let's review the trade that I took today. My God, I don't feel very good about this trade, honestly. And this is sort of like the second trade that I was looking at here. Not this one, but this one, right? I thought like we could have the opportunity to continue to go up. And we sort of did, but like same as yesterday, we broke the high and then we had a drop, right? Now, I'm coming off of this demand. So this demand, I will review it, but this demand, I had it here. It's a COT and a launching point is very good. In fact, I took it later here, right? And I was simply just not believing the market. It's time of day is like 12, and then in the afternoon I don't like to trade. But yeah, I was more leaning to the long side, even though the market was gapping down. So the story here today is this one. I took this one like the same. I didn't want to risk the entire area. So this is the demand. I wanted to risk the previous pivot, right? And my target was not even 73. My target was 72. This was my target. And let's go review the internals, because I think the internals were not as clear, but we did have a divergence on the advanced decline. Let's go review the internals. So my entry was 1002, right? So one thing that I applied today, because we have had momentum to the downside for a few days, I'm not taking limit orders. Not all the time. I didn't do it today. I did it yesterday, but I didn't want to do it today because I saw great, better momentum to the downside. So look, the tick chart opened at minus 1150 and immediately goes to the upside, right? If you see my trade from the 22nd, it was a short, but the 34 candle was holding here, minus plus 1000. Not in this case. Momentum is momentum is dying here. It goes down, it goes up, but ultimately momentum to the downside is dying, right? That's why I decide to take the long. In an uptrend, we don't need momentum to the upside. We just need that lack of momentum to the downside. That's all we need in an uptrend. Take that with a grain of salt. It's not all the time. If you're in an uptrend, you don't need momentum to the upside. You just need lack of momentum to the downside, right? It's the opposite is correct as well. If we are in a downtrend, you don't need momentum to the downside. You just need lack of momentum to the upside. Okay. With experience reading the tick chart, you will learn that. So I engage in this one. Now, why I engage in this one? Same thing. We had the news at 10, which it was Jolt's job opening. This is the footprint. The footprint is 10 in the morning. So 10 in the morning is this one, right? But here I do have this. This is the candle closing at 10. This is the candle closing at 10:01. So my entry was this area right here, high volume here. You see that? Trapped sellers here, these trapped sellers, and this COT from the previous candle right here. This is my entry. Is 47.59, right? But on this is a 2000, right? Here I said, which one is it? 59, yeah. I said, I'm going to let it come down. And when this candle was printed, I activated the order above, right? Breaking to the upside. I took no heat in this trade, probably like 1 or 2 ticks, right? And then very, very fast, very rapidly, I was up in 3 minutes. I was up 9 points. You will argue, oh, you didn't close it. Yeah, I made tons of mistakes here. Now, I had multiple contracts. I had 4 contracts on my main account, 2 contracts in every funded account. I had 40 accounts running. There was 40 times 2 is like 80. It's sort of like 8 minis position, right? That's my entire position. So could I gotten half? Probably like $1,500, $1,800, and then got stopped out. I was up $3,700 in this trade. But my mistake was not believing that these trap buyers were still present here, right? Remember, these are buyers that are trapped from yesterday in the afternoon. Some of them came here, they bailed out, again, revisit this area, and I can bet you that, yeah, we came later here. You see that? Still working, right? All these buyers still selling up here, right? and probably adding more selling positions here. Okay, so it doesn't look good to the upside, although we are still within the range, within the big range. You see that? This is the big range. But yeah, the market is not looking very good for a continuation to the upside. We might stay here for a few more days, or if we break to the downside, we'll be happy to take this to the short side. Okay? Now remember, you have launching points, you have other areas that you need to pay attention on its way down. I'm gonna conclude this video. I hope you liked it and you learned from it as I did. Tomorrow, if I have multiple contracts, I am against the overall few days trend, the short-term trend, because right now the short-term is turning more bearish, right? I need to learn how to interpret the market and not being so rigid with my targets. Okay, be rigid with my stop. That's unnegotiable. That's non-negotiable. Stops are stops, and if you made a mistake, then you realize, you learn from it, move on. But on the targets, there's an opportunity for me to learn how to navigate, how to improve, how to be more flexible and get my money out of the market, right? As the way it works is a constant learning process, and I think I can get better if I continue doing the right thing. I didn't overtrade, I didn't take crappy trades, I did what I supposed to do, which is taking good high quality trades. Okay, so I hope you like the video. If you like the content that I produce here, please share it to other people and consider subscribing to the channel so we can grow. All right, see you in the next one. Bye.